Hello everyone once again, and haven't seen you guys for a while as I haven't been doing any videos of late. But I'm back again. Why? Because it's currently earnings season again. So today we're going to be talking about American Express Q4 2023 earnings as well as its full year uh, results. So for those of you who have not watched my shows before, I'd like to welcome you to another episode of my Company Health Check series. So what's the Company Health Check series about? Here I will share occasional updates on my portfolio companies I invested in and I'm still holding. I will analyze them using the bottom-up approach, usually looking at the quarterly reports all the way to the full year and beyond. By journaling my research in video format, I hope I can make myself more informed of my past decisions, be it right or wrong, and also share my insights with everyone here. Hopefully, all of us can benefit in some way, especially to fellow active value investors like myself. So for more info on why I invested in American Express, you can watch my first episode about my thoughts on why I invested in American Express. All right, without further ado, let's go. Not sure if you can see this clearly, but anyway, today we will look at the American Express fourth quarter 2023 and its full year results release. So let's first deep dive into American Express Q4 segmented revenues. For the segmented revenues, I noted flattish growth on American Express Q4 segments, all segments, okay, based on its quarter-on-quarter performance. Its best performing business is in its global merchants network business segment, which grew 4.4% quarter-on-quarter and 8.7% year-on-year. American Express main business contributor, its US consumer services business, grew a slow 1.2% quarter-on-quarter, but is up overall 8.5% year-on-year. Overall, main business revenues for all segments net of provisions and credit losses only grew a paltry 1.3% quarter-on-quarter, or 7.2% if measured year-on-year. American Express pre-tax income for each business segment performed poorly quarter-on-quarter on all fronts. US consumer services, also American Express main contributor of net income, declined 7% quarter-on-quarter. Overall, net pre-tax income for American Express fell 18.6% in its quarter-on-quarter performance, but it's up 19% if measured year-on-year. We now look at this chart of the total billed business and network volumes. So we can see that the growth in terms of revenue grew 3% quarter-on-quarter, and process volumes remained flattish. Overall, business volumes in this quarter beat all previous quarter growth, signaling improved consumer sentiments. On this next chart, you will find that overall consumer services billed business volumes in terms of revenue grew 3.8% quarter-on-quarter. But by looking at the breakdown, you will notice that there has been a decline of the travel and expenditure business due to slower airline spend within Delta. Fortunately, this decline was offset by its goods and services business. Again, total revenue volumes in this segment beat all previous quarters' growth rates. However, the rates of growth in Gen Z acquisition slowed to 15% this quarter from 18% in the previous quarter. The Gen Z market is an important indicator of growth for American Express, as management's vision is to grow this segment. Let's look at the international card services billed business charts, worth noting. In this chart, international card services saw a very strong growth on its goods and services segment at 10% growth quarter-on-quarter and 13% year-on-year. But this increase was offset by a slight decline in its travel and expenses or T&E segment, which is consistent with the previous billed businesses segments. So what is the verdict of the business performance here? As I analyze the company's overall business build revenues, I can conclude that American Express have done quite alright in most of its operating segments for the fourth quarter ended 2023 in terms of volumes. However, the performance for its real revenue growth on most segments became significantly reduced due to higher provisions and costlier interest expense charged to each individual segment, with the exception of its global merchant network business, of course, which outperformed the total portfolio in terms of growth due to its lower revenue base as compared to the other segments. We now look at the card fees and new cards acquired trends to the end of the year. All right, this gives us a snapshot of their new membership growth at American Express. You will find that net card fees growth is the lowest for the fourth quarter 2023 and has been in decline since the beginning of 2023. New cards acquisition growth have fortunately remained similar to the quarter 2023 at 2.9% and have stayed roughly the same throughout the year, which is a good sign. Okay, here we look at Visa as a competitor to American Express to find out how our peers in this industry is doing. You will notice that Visa's service revenues base is much lower than American Express. Therefore, its growth in this segment should seem to perform better due to a lower base. American Express does not have any data processing businesses, so we will not be able to compare this segment though. In the international transaction revenue space, Visa seems to have a slightly larger revenue base compared to American Express. Their growth in this segment have also outperformed American Express by a large gap. Therefore, I believe that Visa has a greater exposure in its overseas markets compared to American Express. I noticed that Visa's growth this current quarter is also flattish, and this trend is also very similar to that of American Express. Upon announcement of Visa's first quarter 2024 results, recently the share price was pushed down as investor sentiment for Visa turned to disappointment. From here, let's look at American Express management outlook. So, management expects to have a similar momentum last year all the way to the current 2024 financial year and expects to deliver annual growth between 9 and 11%, which is a lower forecast given its previous estimates for 2023. Management also provided some color on its new product called the Pay Over Time. As you can see from the website here, so this is a screenshot. Pay Over Time is actually a facility that is attached to the charge card products, where customer can decide if they want to revolve a proportion of their bills. This is the fastest growing category for American Express in terms of loan growth. It is very well received by card members so far, and it is a way for American Express to give them an added facility where they can revolve over a period of time. American Express also monitors their credit profile, and so far it has been top tier because very much is attached to a very premium base of customers. This product will enhance customers' engagement, and management is hoping to leverage on it further to drive growth in its existing portfolio. There will also be more product refreshers and enhancements to come in 2024. The management here also has reiterated that the effect of an expected federal interest rate drop will not affect American Express net interest income or NII, as the very strong growth was a function of tenured card members rebuilding balances post-COVID. At some stage, there will be a pullback to a more normal rate, and that will naturally drive the net interest income to a more moderate level of growth. This will reinforce the reason why the interest rate dynamic in what the Fed will design doesn't play a big role here in American Express in terms of what is going to happen to the net interest income. American Express also run multiple scenarios on what if billing revenues is a bit stronger, or what if net interest income is a bit weaker, and this model lands in the same range of 9 to 11%. So that's very much how management actually came up with the revenue guidance. Management also mentions that there will also be an increase in provisions and bad debts, but at a range of 2% in 2024. They believe and assert that their wider portfolio of affluent clients will hedge itself against a longer dated receivables, and a strong capital buffer, which is above market requirements, can withstand any adverse decline of bad credit. I have tracked American Express sales and the profit and loss from 2005 all the way to current 2023 results. And American Express here has shown resilience in its revenue growth and net profit margin since 2005. Net profit margin strength at the most during the credit crunch of 2009 to 2010, from double digits to just single digits, which are highlighted in yellow. But margins have since improved back to the double digits, as you can see. However, the business environment for American Express have changed pre and post COVID. You will notice that net margins have came down and declined even further in 2023, from almost 15% in 2022 to around 13.5% in 2023. This is mainly due to the higher cost of interest and also higher provisions for losses throughout 2023. Net interest yield per customer have remained the same at 11.7% as compared to the previous quarter. Net write-off rates on its total portfolio for fourth quarter have increased to 2%. While management feel that this figure is within range, it is a cause for concern that must be addressed, given that the fourth quarter increase is the highest among all the previous 3 quarters. Loans that are 30 days past due have also gone up slightly, as shown in the chart on the left. Sorry, this is the charts that you can see, right? So loans that are past 30 days due have gone up slightly, as shown in the chart on the left here. And this is also the highest among all previous 3 quarters. Okay, on the expenses front, on the operating expenses front, bulk of American Express expenses came from card member rewards, which has increased 3% compared to quarter 4 2022, while business development expenses was up 14% and card member services up 21%. Management has achieved a relatively similar spend on its quarter 4 versus quarter 3 2023 marketing budget, bringing the total marketing budget spend of 5.2 billion in the year ended 2023 lower than what management had forecasted, which is rather commendable, given that management has managed to continue acquiring new card members during the fourth quarter with decent growth. However, the total expenses to revenue ratio came up to 72%, and management had initially set a target of 42% on cost over revenue for the full year ended 2023, which was not achieved. This brought a full year operating expense increase of 10% year on year. On the balance sheet, provisions for write-off continue to grow this quarter. Total provisions grew 16% quarter on quarter. Delinquency rates also grew 14% quarter on quarter, which has to be a cause of concern. I'm hoping this should not continue growing higher every quarter in 2024. But as mentioned earlier in my video, management still expects this to grow a bit at a slower pace in 2024. American Express current forward PE is at 16 times, and this has declined compared to my estimates in my previous episodes, and is a sign of weakening expectations based on my estimates. American Express median PE ratio is at 17 times. The industry PE is at 8 times. In my revised PE valuation forward valuation metric, American Express share price to me is revised downwards at the 160 to 170 range, reflecting the continued increasing provisions and interest costs, which will likely eat up margins in 2024. The good news is share of American Express shot up 7% in one day since the announcement of its full year 2023 results, reflecting investors' continued bullish business expectations right up to 2024. Based on my revised discounted cash flow analysis, American Express is now priced downwards at a $65 billion valuation, down from the $77 billion valuation in my previous episode. This new revised valuation is 1.4 times its forward 2024 revenue, and currently American Express trades at 2 times its 2023 revenues. Here, this is something new that I will be creating for my future videos as well, for easier reference, all right? So I have charted a performance table of my own conclusion of American Express based on management forward views and my own expectations of the business in 2024. So just to explain what the gradings are for, right? For grade A being my highest value factor and grade D being the least value factor in terms of my forward expectations for American Express. Overall, I graded American Express forward performance to be a C grade. And my next course of action, being it a C grade, is to take no action. Wait and see. I would use a wait and see approach before buying more in 2024, subject to future earnings releases and whether management has managed to keep track of its vision going forward. So a good market is not always a good thing. A good strong market, all right, that is increasing daily. I know it's very bullish recently for the S&P 500. And of course, if you have invested in any of high growth stocks, or we call it the large mega cap technology companies, right? Your returns will be quite good. But before I go, here's an article written by Markets Insider with regards to Amundi Asset Management. So what did Amundi Management say? They believe that the Magnificent Seven companies, which is such as the big tech like Apple, Microsoft, Google, Amazon, Tesla, will underperform the market in 2024, as they believe that valuations have already significantly deviated from their earnings in 2023. Of course, some have not reported yet their 2023 fourth quarter earnings, and this they believe that could cause a correction on their stock prices. Anyway, what do you guys think? You can leave your thoughts in the comments below. And I hope that everyone here had a good run up until the end of January. Happy New Year once again. And for the win, guys. Okay, do remember to subscribe if you like what you watch. Okay, and I hope you can support me. All right, and subscribe by subscribing to my channel so I can make more videos for you guys. All right, see you in my next episode. Goodbye.